Let's head back to the 2025 U.S. Canada Summit hosted by BMO and Eurasia Group. Our own Lindsay Biscaya standing by. Lindsay, take it away, please.
Thanks, Andy. Yeah, well, we're joined now by the CIO of BMO, Sadiq Adatia, for a bit of a conversation. Thanks for joining us. Appreciate your time.
Thank you for having me.
This is an interesting time to have this summit, right? Pretty timely when you look at what's happening in the world, at what we saw yesterday. So we'll start with kind of trade relations globally, because I know you were just in China about, 10 days ago.
Yep.
Speaking with clients and investors down there. Particularly, it's interesting right now to see that kind of trade relationship between China and the U.S. What were you hearing?
Yeah, so first, definitely excited that we're hosting the summit here at BMO Place. But generally, it is an interesting time because it's really dynamic given what is actually going on in the last couple of days with the U.S. and Canada. But yeah, about 10 days ago, I was in China taking a look at their economy and trying to understand, where things stand. How do they feel about the relationship with the U.S. and particularly what's going on in terms of their trade discussions on the tariff front as well. And what I will say is just generally, the economy seems to be actually moving in the right direction. The property sector is still having difficulties, but what you're actually seeing is people are selling out of the property sector to put money into the equity market. And that's been a positive net return because obviously not much is happening on the residential side there, but a lot has been happening on the equity market side. So you're seeing consumers feeling a little bit more confident about things. Spending is starting to improve, probably not the levels they would like it at because savings rates are still quite high. But I would just say that, from a relationship standpoint, I think the China part of that trade negotiation is a much stronger entity than what you've seen in the rest of the world. They're able to stand their ground a little bit stronger, and I think the relationship has become a lot more amicable compared to what we would have seen about a year ago. So that is positive because these are two of the world's biggest economies. If they're playing a little bit nicer, the whole world does win if that occurs.
That's at least good to hear because we've seen there's obviously still some competition, whether it's friendly or not, right? I think of the U.S. the U.S. government taking out some stakes in some mining companies over the last couple of weeks, trying to get into that race with China when it comes to critical minerals, when it comes to energy, AI, growing their competition here in North America. Does that play into anything at all? Are there certain sectors that you're seeing that are stronger or will be in the near future?
Yeah, absolutely. If you think about the standpoint of, every country is going to do what's best for their country. That's the first and foremost thing. So when it comes to, what the U.S. needs to do to be competitive, it's looking at China as one of the strongest competitors out there. It has to figure out how can we do things so that China doesn't have a dominant share in some areas, and therefore the mining is one good example of that for sure. And so they have to look at how they're going to look at partners and relationships, how they're going to build out, some of their strengths and strengthen up some of their weaknesses along the way. And so mining is definitely one example of that for sure. I think the other part of that is to find out allies. And I think this is why the U.S. Summit is important because, if North America is stronger, that puts both sides at a much stronger competitive advantage against the world as well. And I think if we can continue to build stronger relationships between the borders, then that helps everything across the board, including China's strength that's starting to emerge more and more every day.
You touched on it, but the relationship right now between Canada and the U.S., how is that affecting markets here at home?
Yeah, so obviously, there was a little bit of turbulence earlier on. I think that was expected given the fact how tariffs started off earlier in the year. I do think we're seeing more of an amicable environment between all parties. Just the last day, we heard President talk really highly about Mark Carney, about a very strong politician, a very smart man, doing good for the country. He did throw a couple of nasty comments in there as well, but I think it was in a proper, positive tone for him, which means hopefully that he is standing up for Canada on that standpoint. So I do think that the key part of all of this is actually not really even the tariff part. It's the USMCA deal that we're going to see down the road. And I think everything that's happening from now to that point is really trying to hope that we get to a good relationship heading into that negotiation, which generally should bode well for Canada. But we have to understand we have a great deal at the moment, and it'll be hard to replicate that exactly in 6 to 12 months.
Yeah, that free trade agreement, so crucial. Okay, let's hone in a little bit. It's the month of October. There's something called the October effect for the month of October when it comes to the markets, when it comes to investors. What are you seeing right now? Is the October effect real, and what's it actually doing? What sectors are being affected the most?
Traditionally, it is real, I would say. People get nervous. They're worried about past events of Octobers that have caused market declines. But this year, I don't think so. I think the market's ignored almost every sort of, statistic, every sort of, thing that would normally worry markets, and it's just shrugged it off. And I think that will happen in October as well. Expect the market to continue to go higher up, just on pure fundamentals. Earnings have been relatively good. You're seeing rate cuts starting to happen as well. And generally, the consumers, even though we're talking about unemployment maybe weakening in the U.S. a little bit, still at a very good point across the board. So I expect consumers to continue to spend. Holiday season is not far away. Valuations, though are a little expensive, I think are still relatively fine. And I think the markets go higher from here, both Canada, the US, internationally, and emerging markets. I think all of them continue to move higher from here, and that's very bullish across the board for sentiment.
Okay, Mr. Adatia, I appreciate your time on such a busy day. Thanks so much.
Thanks for having me.
That was Sadiq Adatia, CIO at BMO. And Andy, we've got many more conversations coming up throughout the day, but for now, I'll send it back to you.